NIO has just published its Q1 2025 earnings report with an overall net loss of 930 million. So, not ideal for investors, but I think they were expecting this. In this video, I'm going to offer some commentary on the details of the earnings report and what NIO needs to do next if it's got any chance of making profitability by the end of the year. Let's take a look. So vehicle deliveries were 42,094 in the first quarter of 2025, consisting of over 27,000 for the NIO brand and 14,781 vehicles for the Onvo brand. So this represents an increase of about 40% from the first quarter of 2024, but a decrease of 42% from the fourth quarter of last year. So for the first quarter 2025, vehicle sales were at 1.36 million, representing an increase of 18% from the first quarter of 2024 and a decrease of 43% from the fourth quarter of 2024. Gross margin was at 7.6% for Q1, compared with 4.9% in the first quarter 2024 and 11.7% in the fourth quarter. So this is down from last quarter. And of course, the big figure that most investors want to know for this Q1 report is the overall profit and loss. So NIO posted for Q1 2025 a net loss of 930 million, representing an increase of 30% from the first quarter of 2024 and a decrease of 5% from the fourth quarter 2024. So overall losses are up compared to this time last year, 30%, but down slightly from last quarter. But still, this amount is significant in terms of the financial balance sheet. So NIO will have to work really hard to try and rein in these losses if they've got any chance of reaching profitability by Q4. And also they reported that they have about $3.6 billion in the bank to keep them going. Now, in terms of recent developments for April and May this year, they did post that the company delivered just under 24,000 vehicles in April 2025 and just over 23,000 vehicles in May 2025. So total for 2025 was 89,000 and overall, since launch, 760,000. They also noted in the report that Firefly now has begun deliveries, but no official numbers in the report. So CEO William Li offered some commentary on the financial performance. He said, since the beginning of the second quarter, we've seen a steady increase in monthly delivery volume. In April, our new products, the ET9 and Firefly, have secured notable market shares in the premium executive market and the high-end small electric car market respectively. He went on to say, we've also witnessed the rising demand for the Onvo L60. In late May, the new ES6, EC6, ET9 and ET5T also started deliveries with all around upgrades. So based on this, he expects total deliveries for the second quarter to reach between 72,000 and 75,000. Which is forecasted to be a year-on-year growth of between 25 to 30%. Now, with such a big loss in this report, I was looking for commentary on cost control, and they did offer some wording here. They said, since the first quarter, we have implemented a range of cost control measures, including organizational restructuring, cross-brand integration, and efficiency improvements in R&D, supply chain, sales and services. And the CFO, Stanley UQ, he said, starting from the second quarter, the company aims to achieve structural improvements in overall cost efficiency with continued progress in operational performance. So look, this is pretty generic guidance. So I think I remember reading something similar in the last report. So at the moment, they're not quite delivering on what they're promising in terms of lowering those costs. And of course, one of the biggest ongoing costs for NIO is R&D. And in the report, it did state that The R&D expenses for Q1 were 438 million, and that was an increase of 11% from the first quarter of 2024, but a slight decrease of 12% from the fourth quarter. So R&D spending has gone down by 12% since the last quarter. So they're making steps in the right direction to cut some costs. But clearly they need to cut costs across the business in order to reduce the overall net loss. And NIO did offer some guidance for the next quarter. They said in the report that the company expects deliveries to be between 72,000 and 75,000 vehicles, and that would be an increase of around 25% to 30% from the same quarter in 2024. So they're looking to sell more cars. Now, while they did state they're looking to obviously improve revenues in the next quarter, which will help the bottom line, they didn't offer any guidance on how they would specifically, cut costs in terms of actual physical numbers. So, without that guidance, it's difficult to know what the bottom line is going to look like next quarter. And in reality, if they've got any chance of reaching profitability by Q4, there needs to be a significant cut in operating costs, and to see that bottom line perhaps come in Q2 around about that minus 500 million, maybe less. If they don't, it's going to be very difficult just to cut almost $1 billion off the bottom line in 3 months. So based on NIO posting this large net loss for Q1, how did it affect the share price? So if we look on the daily chart for NIO, we can see that price did drop significantly during the trading period. And at one point, it was down around about 335. But actually, buyers came back in and it actually closed higher around about 353. So that's positive. Although there was a sell-off, some buyers saw value and picked up the stock a little bit cheaper at the end of the day. So overall, NIO is down 5% on the week, down 13% on the month, and down almost 19% over the last 3 months. So it is in a long-term downtrend and it's still looking bearish. However, right now, the initial reaction to the Q1 report doesn't look that bad. And it looks as if investor sentiment hasn't changed much regarding NIO based on these numbers just reported. So overall, NIO is improving its sales, but is still posting heavy losses. I really think it has to really focus on cost control for the next quarter's report if it's got any chance of reaching that profitability target by the end of Q4. And by doing so step by step, I think it's going to help investors come back in as they see progress towards profitability and the possibility that the share price eventually is going to rise and break out. Thanks for watching.